Microsoft pulling back data centers. There's a lot of ambiguity there, a lot of gray area. I don't think the Saudis replace that total income. I'd be a seller of this pop after hours. And I think it was just people were bracing for a lot worse than we got. I think it comes off here. I think you're looking at lower prices tomorrow.
Yeah. What do you think, Dan?
Listen, I think the story has gotten pretty much on the equilibrium, right? There's still a lot of uncertainty, what we just talked about with the China situation. I think one of my biggest takeaways over the last month or so is that Jensen's literally been on the president's tail no matter where he's going. Yeah. And I think he recognizes the fact that they have the ability to kind of ramp up in the Middle East, and there's going to offset a bit of this uncertainty if he remains loyal to the president's causes. You know, Christina just mentioned the Stratechery interview with Ben Thompson about a week and a half ago. I mean, he went all in. I support the president. I support his vision. I support this or that, whatever. I mean, these guys know how to play this sort of situation. So if they can ultimately get to a place where even if there's not some trade resolution and they get some sort of exclusions, they get some of this business back, they've grown the business in areas like Saudi Arabia, it's not a bad thing. I'm with Steve, though, and I've been saying this for now a while, the CapEx by the hyperscale, it's going to slow down at some point. And the rate of change over the last year or so has slowed down a good deal. And so we haven't reached that digestion phase. So that's likely to come. No one can put their finger on it. But NVIDIA hasn't done anything in a year. Okay, it's literally the same spot it was a year ago. And I think that's telling you enough. There's probably better ways to play this theme right now.
Although since the last earnings report, it's up about 12% versus the semiconductor ETF, which is 3%, basically flat. I mean,
3 months ago, following a poor Q4 report and growing macro uncertainty, some investors were prepared to abandon Nvidia. However, a lot of positive news has been coming in over the past few weeks, so the atmosphere has swiftly changed. An amendment to the 2026 budget bill that raises the semiconductor investment tax credit from 25% to 30% was adopted by the Senate Finance Committee on June 16th. Chipmakers like Micron and Taiwan's semiconductor manufacturing would profit from the act, since it would increase the value of their subsidies. If those important participants in Nvidia's supply chain stand to gain, then Nvidia may indirectly profit from lower prices. The U.S. tightened export restrictions on advanced chips and tariff tensions flared in early April, which hurt tech stocks like Nvidia, which took a $4.5 billion charge in the April quarter and claimed it would have made an extra $2.5 billion in revenue without the restriction. After the U.S. and China agreed to temporarily reduce their tariff rates on one another, the stock later rebounded. Additionally, optimism increased when the Trump administration removed the Biden-era AI diffusion rule, another export restriction on sophisticated AI chips. In May, news broke that Nvidia would supply AI chips to Humain, a rising tech company in Saudi Arabia. Nvidia's stock closed at $144.12 on June 17th, just short of its January all-time high of $114.41. On May 28th, Nvidia announced impressive fiscal first-quarter results, with adjusted earnings of 96 cents per share on $44.06 billion in revenue, exceeding Wall Street's expectations of 93 cents and 43.31 billion. However, the company projects revenue of 45 billion in the July quarter, falling short of analysts' estimates by almost $1 billion. According to the chip maker, if not for the export limitations from China, the amount would have increased by roughly 8 billion. According to a recent Reuters story, U.S. officials have stated that they would like to keep the present tariffs on China in place for an extra 90 days after the August 10th deadline, set in Geneva in May. But the battle of technology is far from over. U.S. Commerce Department officials are considering new restrictions on exporting cutting-edge technology to China, including more comprehensive bans on the sale of chip-making equipment, according to the Wall Street Journal. China is a key market for Nvidia, accounting for 13% of its revenue in the most recent fiscal year. Nvidia's financial performance may suffer if the two biggest economies in the world are unable to come to a trade agreement. Jensen Huang, the CEO of Nvidia, has long cautioned that export restrictions may harm American chipmakers and perhaps jeopardize the nation's standing as the world's leading technology nation. Huang recently stated on CNBC that it is not logical to give away half of the world's AI researchers if we want the American technology stack to dominate the global arena. I believe the China stack will prevail as long as all AI developers are located in China. According to a research note retrieved by thefly.com on June 17th, Barclays analyst Tom O'Malley increased the company's price objective on Nvidia from $170 to $200 and maintained an overweight rating. The objective suggests a 39% increase in value given the current price of Nvidia's shares. Barclays examined the supply chain after Nvidia's Q1 release and now projects $2 billion in revenue growth in July over Wall Street projections. The company raised its compute sector projection from $35.6 billion to $37 billion. The analyst stated in a research note that Nvidia's GPU architecture, Blackwell, which powers its most sophisticated AI chips for data centers, had a monthly capacity of 30,000 wafers in June, which was less than the 40,000 wafers that Barclays had initially predicted. Utilization is still high despite the short-lived lull, and the supply chain appears to be doing well in the second half of 2025, which is consistent with the rising demand from agentic AI applications. According to TipRanks, Wall Street has set an average price objective of $172.36 for Nvidia stock, with a low estimate of $100 and a high forecast of $210. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
With a total value of almost $3.5 trillion, it's the first time at the top since January 24th. But what do you do with the shares here? Buy or sell? Guy.
Well, you're familiar with that Meatloaf, the singer?
No. Mr. Loaf?
Yeah.
Mr. Loaf?
To you.
2 out of 3 ain't bad.
Exactly.
Do you have a real name? Do you have a real name on Meatloaf?
Not Jim Steinman. It was like McEnany or something. Sorry,
I don't know.
I'm sorry. I apologize.
Mr. Loaf, to you.
NVIDIA is the out of the two, that's the third one that I've obviously not gotten right. And here we are at 141, which is where we were trading after they reported earnings. An earnings report that we collectively said was very good. The margins were great. Everything was alike. The stock actually sold off in a few days after, got down to 134, and it felt like a sort of a replay of what we saw in January, but it's not. Now you have analysts sort of piling in. You still have to take at that 153 level, and given today's price action, it feels like it might happen.
And there's also a report, I think in the information yesterday, that they're going to develop a new China chip, basically that goes right up until the limits in terms of exporting AI chips, the H30, I think, B30, excuse me.
Yeah, and this happens, obviously, there's been a lot of back and forth, and, we throw NVIDIA in that sort of final battle fought with U.S. tech brands, and Tesla, Apple are right in there. They thought they got some sort of exclusions, and then it's gone back and forth, and I think it's about as clear as mud what's going to be going on there. And, listen, I have no idea. I'm with Guy. Last week, it felt like a lot of folks were really excited about the guidance that they gave, the trip that Jensen Huang had gone on with Trump to the Middle East. And,
you know what we call that?
What do we call it?
We call that Gensanity.
Oh, my gosh.
Oh, nice job.
I like
I forgot all about that. It's so catchy.
Yeah.
Anyway.
So we're not just about acronyms here. We're about nicknames,
we're coining
too.
terms.
Okay,
we're doing a lot.
No, that is something that I think a lot of people look by some of the issues as it relates to China. I'm still in the camp. you can kind of look at a CoreWeave and you say, look what's going on here. You can kind of look at Microsoft back towards those all-time highs, despite that we don't see any meaningful pickup in Copilot and that sort of thing. We saw Azure kind of do better than expected. So I'm just in the camp that sooner or later, I've been saying this for a year, you're going to get a bit of a digestion. But the one thing I just want to say here is that, we talked about this, whether it was going to be from $153 or $200. These stocks can get cut in half. And it happened in a very short period of time. So there are risks when you're buying into this where sentiment feels absolutely great. And that's one of the reasons why I think it's really important to keep touch or close to these data points. In Taiwan Semi, which makes up almost 90% of NVIDIA's high-end GPUs, if you're hearing it from there, you're hearing the guidance, you're hearing a new channel, then I guess that's fine. I'm just not a buyer here. I wasn't a buyer. I should have been a buyer at 95. Everyone should have been a buyer at 95, but who knew?
Well, that was the digestion, right? And so, you said that there will be a digestion again, I'm sure, but it's $1 trillion since that that low point. And what we got the other day from NVIDIA was at least a handful of answers that were really important. We had a China answer. I think more broadly, even not just on earnings, we've had some answer in terms of export restrictions and also, where NVIDIA was really on the other side of the U.S. government. NVIDIA right now seems to be, alongside the U.S. government, running around the world cutting sovereign AI deals. We're going to talk a lot more about Meta's deal with Constellation, but that's just another reaffirmation that the demand out there for AI data center is alive and well and hasn't even altered at all. So I think Blackwell supply, some of the dynamics, I think, around just what's going on with their next wave of chips has now been answered. There's still some uncertainty, but why would we doubt NVIDIA after they've delivered on everything else? But most importantly, it gets back to valuation, because this is a company that's trading 27, 28, 29 times 12-month forward with a NASDAQ that's at 25, 26 times. What would you rather own here? Would you rather own NVIDIA and its growth? Or
Throughout 2025, mega-cap technology firms have been among the most significant forces in the stock market. Nvidia, one of the most popular stocks in the artificial intelligence, AI space, has been having a rough year. A months-long decline that bottomed out in April reduced the market capitalization of the graphics processing unit, GPU King, by almost $1.4 trillion, despite the fact that it peaked early this year at almost $3.7 trillion. But for the past month or two, Nvidia's stock has increased and has nearly fully recovered from that drop. Let's examine the initial factors that led to the Nvidia sell-off. After that, I'll go into depth about why I believe the stock is ready for a spectacular breakout in the second half of 2025 and why investor interest in the chip designer is growing. The following chart shows how Nvidia's market capitalization changed during the course of 2025. The arrival of Chinese AI startup DeepSeek on the scene was the catalyst for the stock's volatility in January and February. When DeepSeek management claimed that it had created its extremely complex R1 model at a remarkably low cost in comparison to rival AI models, and that it had done so exclusively using outdated NVIDIA chip architectures that are no longer frequently utilized by American developers, initial reporting took them at face value. This led many observers to wonder whether demand for NVIDIA's new Blackwell series of chips would be as high as anticipated, and how crucial the company's most cutting-edge GPUs would turn out to be for AI development and training in general. However, as more details regarding DeepSeek surfaced, it became apparent that the business might not have been completely honest about how it trained its model or how much it actually cost. Investors realized that, in the end, DeepSeek might not pose a serious danger to NVIDIA's operations. However, its stock kept declining. Why? Investors were essentially speculating throughout March as to whether President Donald Trump would actually implement the high tariffs he had frequently pledged to enact during his campaign against America's trading partners. In what he dubbed Liberation Day, Trump announced high new tariffs on items imported from almost every nation on April 2nd. He threatened to impose particularly large tariffs on China, a market that is crucial to NVIDIA's expansion. Following the announcement, NVIDIA fell to its lowest level since 2025. Over the past few weeks, investors seem to have jumped back on the NVIDIA bandwagon, as the stock chart above illustrates. Generally speaking, it could be argued that changes in the US-China trade talks have reduced investor anxiety. Although I am theoretically aware of that concept, I believe there is more to it. NVIDIA's management recently informed investors that the business will be removing China from its financial forecast for the time being, despite the White House's upbeat language regarding the state of its negotiations with China. In my opinion, there are a few other reasons why investors might be reinvesting in the stock. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Of this strong and steady resilience after that brief, mild decline on Friday.
Well, I think the markets over time have learned to brush aside geopolitical tensions. In fact, we've done some research on this. And what it shows is this is, Carl, that if you look at since 1950, the 25 most significant geopolitical shocks around the world, the S&P 500 tends to decline by about 4% within 15 days. And within a month or so tends to recover that 4% loss completely. That's because in 9 out of 10 times, the geopolitical tension tends to be contained and doesn't spread. Now, the markets have become even wiser over time, that these dips on geopolitical tension have gotten shallower and shallower. So I think that's what we're seeing here, which is that the markets think that, this appears like a scary moment, but in its collective mind, it looks back at history, says 9 out of 10 times the geopolitical tensions tend to be contained, and so carries on. Now, there's obviously a risk that there'll always be that 1 out of 10 times, and that's the fear that lives in most individuals' minds. But as I said, that history is better remembered than it's lived. And that 9 out of 10 times, these things just tend to fade. And like in the past, too, we think that this is a very uncertain time. But in the past, there's always been uncertainty that tends to get resolved the right way.
Meantime, I wonder what you make of what some call a gradually slowing economy, one that may continue to slow into the back half. Do you think that creates a backdrop where you can sort of defend against geopolitical risks that pop up or trade disputes that pop up?
Yeah, I think that there's no doubt that the U.S. market's resilience in the face of all that's happened this year is quite stark and quite surprising to many people. But I think that the biggest story, Carl, this year has been just how well international markets have been doing. And the dollar's been a very big factor out there. So I think that what we're seeing this year is that flows have begun to the international markets again after a long drought. That's the real story. In the US, the big story remains just how smart the retail investor has been. You know, we always tend to sort of look at the retail investor as dumb money, as the laggards. But something which I've also now come to sort of appreciate is that the retail guys have really ended up being smarter than the hedge funds because they're the ones who bought in size and in dip when this market sort of went down a lot. And it's the hedge funds who are now sort of nibbling in every time that there's a dip because they are lagging behind the benchmarks so significantly. But the big story here is that the American economy so far has been relatively resilient, more resilient than most of us.
As you may remember, early this year, executives from SoftBank, OpenAI, and Oracle convened at the White House to unveil the Stargate project, a massive infrastructure project. The joint venture's members plan to invest a total of $500 billion over 4 years on data centers located in the United States and other infrastructure built especially to support artificial intelligence. In addition to Microsoft, ARM, Oracle, and OpenAI, Nvidia was identified as a significant technical partner in the project. Nvidia has already joined other Stargate-like projects that have been started by the United Arab Emirates and the Kingdom of Saudi Arabia. Nvidia has been recognized as a hardware company for the majority of its existence. However, some investors might not be aware that the business has been subtly expanding its ecosystem for years. Nvidia, for instance, has created a software framework called CUDA that enables developers to configure their GPUs for the precise applications they need and maximize their parallel processing capabilities. With its industry-leading hardware and software, this integrated system has enabled Nvidia to become an end-to-end service provider for AI developers. Furthermore, Nvidia has invested in a number of companies in recent years, most notably CoreWeave and Nebius Group, leaders in AI infrastructure. These investments, in my opinion, are quite strategic since Nvidia is expanding beyond the design of hardware and software to play a significant role in the building of AI data centers. Its rapid growth into a full-stack AI services provider has made it more difficult for competitors like advanced micro devices and bespoke silicon designers to catch up. Going a step further, Nvidia's management has hinted that the business may use a portion of its strong and increasing profits to fund acquisitions. Although this is purely conjectural, I believe that if Nvidia does seek acquisitions, these agreements will revolve on cutting-edge markets that it may enter to expand its operations outside GPU and data centers, like robotics or autonomous driving. According to current analyst sentiment, Nvidia stock may be on the verge of a breakout. Over the past month, Nvidia, which has a market valuation of over $3.5 trillion, has been vying with Microsoft for the title of most valuable corporation in the world. The main point I want to make is that Nvidia's continuous efforts to diversify beyond chip design and the secular trends driving AI infrastructure investment are the main reasons. I believe the company will not only continue to grow in value, but also maintain its lead over other mega-cap peers in the months to come. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.